We'll do a company update on MTN. So what we try to do on this call is contextualize the recent results, and overall there's no change in our view, but we just discussed the key topics. So we're still positive on the counter, and we see significant upside. So the recent results were quite resilient, but the key issue was around the outlook going forward, particularly in South Africa with the load shedding happening. So the results came in ahead of management's guidance or consensus. They were quite strong and resilient, and the key theme that we're seeing is that the balance sheet overall is still quite strong. So they were able to get cash out of the various countries, which amounted to about 17 billion rand, and they use that to pay down debt. So net debt to EBITDA is currently about 0.8 times. That's a decline from 1 times and about halved since the 2020 highs. So they're paying down debt. It's quite strong at this point, and they're able to repatriate cash out of the various Opcos. We maintain our buy recommendation, although our intrinsic value has declined quite significantly. So we had an intrinsic value of sub $200. Now we have an intrinsic value of 180 with a 40% upside. So this is built on very conservative assumptions, especially within the margins element. So we downgraded our margins in South Africa. So that's a back of the company guiding that they're looking at about 200 to 300 bips decline. So, but it's mainly around load shedding in South Africa. So we're also seeing currency headwinds, and we're seeing that being a little bit more prolonged, and inflation is becoming a bit quite sticky, and which is affecting the currency volatility going forward. So we take a conservative stance, and we slightly lower our exit multiple, but overall we're still very positive in the counter, and we think it offers slightly more than 40% upside.
Thank you very much for joining us today.